Hey friends, if you've been waiting on the sidelines for mortgage rates to finally chill out, well, you're not alone. After all, mortgage rates hit 7.4% in January 2025, and that is no joke. A lot of folks expected things to cool off by now. Maybe you thought rates would start easing off once the Fed began cutting in late 2024, or maybe you were hoping that inflation would calm down and open the door to better affordability. Well, the reality is not so fast. Despite all the headlines, the truth is this: rates have barely budged. We're still hovering in the mid to high 6% range, and many experts say we might be here for a little while. So today, we're going to be breaking down the latest expert predictions on where mortgage rates are headed, how all of this affects home affordability, and whether now is the right time to buy, refinance, or just keep watching from the sidelines. So let's dive in. And if you appreciate content that makes sense of this wild housing market, hit that like button and subscribe. It helps more than you know. Okay, let's start with the current snapshot. At the end of April 2025, the average 30-year fixed mortgage rate was 6.81% according to Freddie Mac. Now that's down slightly from January peak, but still well above what most buyers were hoping for. Despite a brief dip in May, rates have remained stuck in that mid to high 6% range for months. So what's happening here? Well, in short, the Fed is cautious, inflation is sticky, and tariffs from the Trump administration are adding a little bit more pressure. And experts agree mortgage rates aren't going anywhere anytime fast. You may be asking, what does the Fed have to say with all this? Well, in May, the Federal Reserve held interest rates steady again, keeping the benchmark range at 4.25 to 4.5%. That's the third time this year that they've hit the pause. Fed Chair Jerome Powell summed up their stance with one word: patience. Now his quote, well, we're really not at all clear what it is we should do. Let's be real, that's not exactly the kind of confidence that makes markets move quickly. Add in trade policy changes, immigration shifts, and inflation uncertainty, and it's no surprise that Powell says the Fed is in a wait-and-see mode. Now, I know many of you are wondering, how does this impact home buyers? So if you're a home buyer thinking, should I wait for better rates? Well, again, you're not alone, but you might want to rethink this strategy here. Now, Fred Bolstad with US Bank says if you are in a financial position to afford the payments on a home that you find and love, there is no need to wait. And Lauren Young, a chief economist at NAR, points out the harsh truth. When the Fed cut rates 3 times last fall, mortgage rates actually went up. So yeah, waiting on the Fed, well, it might backfire. All right, let's shift lanes here and talk about numbers. Here's what some of the biggest names in the housing are predicting. NAHB mortgage rates to end up in 2025 in the mid-6 range, possibly above 6% by late 2026. NAR forecasts 6.4% average in 2025, dropping to 6.1% in 2026. Fannie Mae is revising their outlook down to 6.2% by year end. Freddie Mac, well, thinks we're in for a higher for longer scenario. Mortgage Bankers Associates raised their forecast to 7% in Q2, dropping to 6.7% by year end. JP Morgan predicts 6.7 average by end of 2025. In closing off, Wells Fargo, who was a little bit more optimistic, expects around 6.5% by year end. Did you, when you're hearing and you're watching this, did you notice a pattern? Not a single one is predicting to return to 5% and certainly not to 4%. And many of you may say, well, Alex, what about refinancing? Now, if you already own a home, you might be wondering, okay, is 2025 a good time to refinance? And the answer is, it depends. Gene Bork, a loan officer with Empire Home Loan, says if your goal is debt consolidation, it might make sense. But if you're trying to lower your payment, it's going to be a tough tough in the world where refinance rates are still well above 6%. And here's a stat that really hits it home. Over 40% of the US mortgages were originated in 2020 and 2021, where rates were at record lows. So unless you're one of the newer homeowners with a higher rate from 2023 or 2024, refinancing is likely not going to save you any money. All right, let's talk about what you should be doing here. And here's the bottom line. Mortgage rates will likely stay in that 6.5 to 7% range for most of 2025. The Fed is in no rush to cut rates. Inflation and tariffs are going to be keeping things, well, they're going to keep pressure on. And waiting for the magical drop, well, that might not pay off. So instead of trying to time the market, do this instead. Friends, know your budget, work on your credit score, and shop around with multiple lenders and be ready to lock in if rates dip. Because as Matt Vernon with Bank of America says, if the house is right and the payments are affordable, it could be the right time to move. All right, friends, and that's going to wrap up this update. If you're looking to buy or sell a home, give me a shout. I'm a local real estate agent who's called California home for the better part of 30 years. I'd love to help you out. And if you found this breakdown, this video helpful, don't forget to hit the like button, subscribe for more real estate insights, market trends, and tips for navigating this wild world of home buying. And also, let me know in the comments, are you planning to buy, refinance, or just sit tight in 2025? Well, friends, that's all I got. I'll be shutting off the cameras. Thank you for watching, and I will see you in the next video.